Hi, everybody. This is Dr. J streaming live from Long Island, New York. It's Sunday at 4:52 p.m. Of course, you're going to get this in replay because I'm actually not live on the air. A lot of you have been asking me, why don't I chart Chinese stocks? Well, I do. I sometimes chart NIO and I do chart XPEV. But I think the request more specifically is to look at Alibaba and Tencent Holdings, TCEHY, two of the Chinese giants. And people on the street have been whispering in my ear that look for a turnaround in these giants, Chinese tech plays. So let's take a quick look. I'm obliging those who after me to do it. And it's a special Dr. J. I don't often come to you on a Sunday late afternoon. So here goes. We're going to start with Tencent Holdings and we'll look at the chart. Okay, I drew in a Zoom channel, which is really taking all the air out of this stock. It was $100 back in, let's see, not too long ago. It was $98 back in, it's hard to see, back here, wherever here is. So I just can't catch the date. No, can't catch it. It's being blocked by this message that I'm screen sharing. All right. In any event, what we have is a terrible down channel, which makes you say, why would I want to be in this one? And if you were in this one at around $98 or even higher, then you really took a beating as it went all the way down to a low of 2 to 3 days, 3 trading days ago. Wednesday of last week, it hit a low of $76. So you would have lost about 24% of your money. That's not too good. And it doesn't look like more than a couple of months, although I can't see the exact date. So what makes us think that maybe it's time to get in? Well, if you look at a broader view going back to 12/28/20, the stock was at a low of $67. And then on about a month or two later, there was a collapse. I don't know exactly what happened. Probably the Chinese government playing games with some of its bigger companies, tech companies. So I imagine something like going after them for monopolistic practices or something like that. I don't know. I'm just guessing. I remember that happening with Baba. I don't know what happened with Tencent Holdings to be precise, but when you're charting, you don't really care what the news was that much. That sent it catapulting from a high of 95.90 to a low of 71, and then it closed back at the top at $98. So whatever that news was, it was quickly turned around the same day. It must have been a very scary day for shareholders. But then it continued as if that aberration never occurred, and it continued in this parallel channel on down, like I said, to $76.44. Now, the good news is we did come out of this channel about a week ago with a big gap up from 331 from the end of March to the beginning of April. The next trading day in April, it shot up greatly. So it closed on March 31st at a high at $79.80, $80, let's say, and opened at $84. So it was a big gap up. but the 100 looked like it was going to be support. However, it gave it back. And now it looks like it wants to close the gap back down to $78. So I'm thinking, is $78 a good place to get in here? Well, I do think so, because we're right at trendline support. Trendline support, we have three very nice hits of this trend line with three higher lows, distinct higher lows, and I think it's going to hold. If my thinking is correct, 76.80 would be a wonderful opportunity to get in. I don't think it'll go to 76.44, but it might come close. So even $77, $77.50, somewhere a little bit lower than where it is now would be very nice entry point for Tencent, as I think the risk reward is very great. I think the 200 should act as support. And you can simply get out if it breaks below the 200, take your loss, no big deal. But if I'm right and it turns around, well, it might be heading right back to that century mark, which would be really nice gains. I think a similar picture, well, not a similar picture, but I'm equally bullish on Alibaba. In fact, maybe more bullish. Let's take a look at Baba. Baba. And while I've stayed away from big Chinese companies, the only one I own is XPEV currently. I have played NEO as well, but I have not played any of the others. Chinese companies tend to scare me a little bit, but despite that, you have to look for value wherever it lies. That includes China. So let's take a look at Baba, often compared to Amazon.com for the type of business that it's in. In fact, not only is it in e-commerce like Amazon, but it's also in cloud computing like Amazon. So it's very much like Amazon. And why do we like this so much? Let's see. For one thing, it's come down drastically, but I never really think that's important. But from recent heights, it was 275, now it's 223. And of course, it was 320 about maybe 6 months ago, or maybe a little longer than that, I don't know. But what I want to do is draw the double. There's a clear double bottom here. I want to draw that. So let's do a horizontal line. And if we look at this low, I think we see double bottom. Clear double bottom. If the lower low is here at 220, and then a few months later, just a couple of weeks ago, it put in another low at 220.42, a couple of pennies more. So we have a very nice double low. We have what looks like a nice support area right at that double low, and a nice candle to end the week on Friday, which is essentially a doji, but it has a nice bottom shadow, and it looks like it's saying, I had enough going down. I'm ready to form a base here and start moving up. So I think just like Tencent, the risk is very small here. I would draw another horizontal line below this low, which is at, let's see, at 215. So if it goes below that, I might consider taking a loss on my investment. So if I bought on Monday, tomorrow at 223, I might consider getting out below 215 for a very small, quick loss. And on the upside, just probably let the RSI tell me when to get out. The RSI is 41 right now, which is pretty low. So for it to get above 70, it'll be a nice gain. And that might be when I would get out. Or I might just ride it all the way back to $320. And it could very well be heading back. So this is a great company. It's the Amazon of China. I think it's bargain prices, bargain basement prices right now. And this has been Dr. J with a special report on Chinese stocks, Tencent and Alibaba. Remember, I'm very bullish, both of them. I'm thinking if you have the same problem as me, I'm in much too much cash. I think I have to look elsewhere. Then this might be the place to look. It's Alibaba and Tencent. That's it from Dr. J reporting to you from Long Island, New York, where the weather is rainy and damp. And it's been my pleasure to come on with a special report. See you all on Tuesday, same time, same place, whatever the time that is. Lately, we've been changing it. But look for us every Tuesday and Friday. Don't forget to subscribe to the channel, and don't remember that my opinions are strictly my own and do not constitute investment advice. Do your own due diligence, check with an advisor, all of those things. As always, I tell you what I think, and I usually act upon my feelings. So probably on Monday, I'm going to be buying a little Baba and a little Tencent. All right, that's it for today. Adios, amigos. Ciao.